What's up, guys? My name is Handsome Kelly. I coach millennials on how to become profitable day traders so they can work less hours, earn more income, and gain time freedom. Now, I actually want to start something different. So normally when the week comes to a close, the actual trading week, I like to look at different videos that breaks down what happened during the markets, right? CNBC, or different type of things that I look at. Now, the reason why I go about doing so is because I want to see from a fundamental point of view how it's going to impact the markets, right? Pretty much my takeaway on that. Now, if you guys don't know, when it comes to trading, fundamentals, which is news, fundamentals let you know when to get into the market, and technical shows you where the market is headed. Now, the reason why it's like that is because, again, the market can't just rise or drop out of the blue without some fundamental back end aspect of the thing, and that's when news comes into play. So I want to do something different. Again, as I start watching these videos, I normally do it towards like market close, like 5 p.m. for Friday night. Or if I don't really have the time, I wait until Saturday, which is like around the time I'm recording this video, to look at them, to look at these videos and really just again get an idea on what's ahead based on the technical aspect of things. To look at both. So this video that I want to look at is pretty much, again, you guys can see it's like a breakdown of what happened this week, as well as like an idea of what's to come. As you guys can see on the screen, it says earnings for this next week, which we do have. That is going to impact the markets. Now, I want to give my takeaway on this as I'm going to be playing a video, so you guys again have an idea of not how I interpreted the markets from a fundamental point of view, but also how I can see from a technical point of view, as well as an economic breakdown to it. Crazy long intro. I'm going to get right into the video. But besides that, though, we do know that Friday, which was yesterday, the time we're recording this, we had the worst day in the markets from pretty much since 2020, right? We have the NASDAQ was down, S&P was down, as well as the Dow Jones, and also the Russell 2000 was down. So again, I want to see just how they're going to go about talking about it. I'm going to pause the video from time to time, give my intake, and then from there, see what they're going to talk about from moving forward. All right, go.
For earnings with names like Caterpillar, Disney, Eli Lilly, names like Caterpillar, Disney. Another big week for earnings with names like Caterpillar, Disney, Eli Lilly, CSX, and Uber and more reporting results. Will the street turn its attention back to quarterly results, and is that a good thing, or will it continue to obsess over rates and the Fed? Here to weigh in, Victoria Green of G Squared Private Wealth and a CNBC contributor, and Jeff Kilberg, KKM Financial founder and CEO. He's also a contributor. Welcome to you both. Victoria, I'm joking a little bit about whether we want to focus on earnings, because it was earnings in particular that spooked big tech over the past couple of weeks.
A little bit. I mean, it wasn't horrible. Apple did fine. Meta did fine. Google was fine. It was just a couple little bad apples in there. But I think a lot of this is we need another catalyst. So hopefully they're going to come out and saying, look, our earnings are fine. Our profit margins are growing. We're raising our guidance. It's all about the guidance. And so I do think we need a little help. I will admit it's facing an uphill battle. We've got weak seasonality. August and September, historically kind of tough. We hit very overbought in the markets in June and July. So some of the sell-off is a little bit of kind of repositioning and sentiment. Caterpillar will be huge. They're seen as a huge leading indicator. How's the industrials doing? Industrials didn't hold up great today. So that's one I've definitely got my eye on, that we'd love to see a beat and a raise. And I think that'd give the market some confidence.
And China, Victoria, I mean, this goes back, but we always used to watch them for a little bit of that China exposure. And that was undermining some results the past couple of weeks. Maybe not so much in big tech, but everyone from Merck to the retail names, Starbucks, for instance, seeing some pressure there. And that's what also has commodity prices down, yields down, and some of these growth jitters. What do you think is going on with the sustainability of U.S. earnings growth, broadly speaking? Are we going to dodge recession here?
I still think so. I have soft landings in the cards. We're obviously watching it closely, because if it's not a soft landing, it's not going to play out like 94, 95. If we don't get these slow and...
All right. So right here, she's talking about pretty much how these earnings had came about so far these past few weeks and how it impacting the markets. We have not been getting good earnings. We pretty much have been getting weak earnings. That's also the reason why investors have been leaving and going towards small cap. But besides that, though, for her to say that we're not entering a recession or we're going to avoid it, that's cap. And I noticed that a lot of economists are pretty much saying that over and over. If you look in the media, you're saying that in general. I think the reason why they really don't want to be honest with the American people is, for starters, Biden's in office, right? That is a political aspect of things. They don't want him to seem as if Bidenomics is not working, but we know it's not working. But besides that, again, if we're being told that it is a recession, people are going to start panicking, going crazy. They're going to start wiping out their 401ks, their investments, and so forth, which would not be beneficial for the markets. But besides that, we are 100% in a depression. We are actually in a recession, borderline depression. You don't have to be a genius or an economic genius to really confirm that we are in a recession. That's the reason why they're going about changing the definition over and over, especially when we get towards these things. But besides that, the things that you can tell is the fact that month over month and year over year, we have household debt continues to make all-time highs. We have household savings continue to make all-time lows. Well, not all-time lows, but they continue to decrease. There's not a single economy that's doing great in which household debt continues to rise and your savings continue to decrease. Again, I don't know why people listen to the media and they say like, hey, they're saying that things are great. Things must be great. It's just not true, right? Like you can also go to the grocery store, or not even grocery store, but anywhere you go to, you can see how inflation is pretty much has skyrocketed and it is actually not coming down the way we're being told. So to say we're going to have a soft landing, that's absolutely not true.
So that gradual cuts to keep us on pace. If suddenly we're doing what JP Morgan and Citi said today, hey, we're going to do 2 mega-sized 50 basis point cuts plus another and 125 this year, that's a huge.
All right. So if JP Morgan is saying that we need 50 basis points, right, which is 0.50%, that's what it is. If we need 50 basis points back to back, why would we need that if the economy is doing so strong? We actually wouldn't need that, right? That just shows that things are not doing good. Things are actually weak right now.
Huge amount of cuts, and that means things are falling apart. So I am watching carefully, but for now, I think soft landing's intact because earnings actually were fairly good. We're having a broadening rally. If you look at the number of people above the 200-day moving averages, they're still at about 75%. So I don't think this is a bad thing. I do have to remind people markets do come down. We have some seasonality facing us here. Sometimes you can lose money in the short term, but the bull market thesis is still intact and soft landing is still intact, though a little bit.
All right, another thing I want to pause real quick as well is when it boils down to the market, right? Yes, markets are going to come down. That is the reason why we hear the sayings, you buy low and you sell high. Why? Because it's the assumption that when you buy low, prices will go up. And it's something that when you sell high because prices are going to come down. That I absolutely do agree with. That's pretty much simple one-on-one. The thing about it is that as of right now, as the time you're recording this, the NASDAQ is down 10%, which is back into correction territory. So, this right now, a lot of new investors are like freaking out. They're panicking. They're exiting out their entries. However, I don't think it's the right thing to do. I think that, again, when the markets are low, you do want to take advantage of those things because, again, we're going to look back and we're saying to ourselves, man, I wish I would have took advantage when prices were low. So, yeah, that I do agree with that. Like prices are low right now. There's a time in which shit is on sale. You want to just rack up and move forward. But let's continue.
A little bit less conviction on that after jobs this morning.
Jeff, you have been quite prescient in pointing out that we might have gotten a little bit one-sided. You were warning about NVIDIA. It's still kind of undergoing a reset here. What do you think about the broader market after today?
Well, Kelly, I think you're seeing market sentiment really reveal itself how fragile it is. And we saw 2 bad data points in ISM as well as a jobs number. And all of a sudden you're seeing people kind of panic, specifically JP Morgan talking about 2 massive 50 basis point needed rate cuts back to back. So what I envision, a little more volatility, but you're right. In June and July, when I saw the top 10% of the S&P 500 at nearly 36% representation of that benchmark index, that's where we got protected. That's where we started buying puts. Now we're seeing those put premiums double and triple. So we are going to take profits in that, and we are going to sell some puts. We want to see what next week looks like. The earnings, the bar is very high. But at the end of the day, Kelly, it was the perfect storm. We saw since last November, you saw the NASDAQ go up 40%, the S&P 500, 35% in a straight line. So to Vicky's point, this is normal. We should see a little bit of a pullback here, but I don't see any panic. I think it's quite orderly. It's just the velocity that kind of takes your breath away a little bit.
She mentioned she's zeroing in on Caterpillar.
Now, one more thing, because I see the video's coming to a close as well. So again, I agree. I don't think we should panic in the sense of like, yeah, markets they're going to come down. However, outside of that, to say that things are going to be soft landing is just not true. I think that right now, great opportunity for Americans to take advantage of the markets, right? They're low right now. Take advantage of that. However, you also want to be mindful of your spending. At the end of the day, like, you can buy all these different investments. However, you also need money to live above water, right? And live above your means. Well, live below your means, but more so live above water. So if you have money in which like you really can't afford to lose, I wouldn't recommend you go about doing so. If you do have money where it's like, all right, I can put like $10, $20, $30, $100 and so forth into the market, and it won't stress me on how I'm going to pay my bill next day or next week, then yeah, go about doing so. Why? Because you know that, as again, the markets will come down, right? That $100, for example, it may come down to like 95, but you know that over time is going to surpass $100, go to 120, 130, 140, and so forth. That is the whole aspect of it. Let's continue and finish this off.
In particular of the earnings next week, we will get a couple of data points. ISM services Monday. What are you going to be watching?
Earnings are always important, but I think it's going to take a back seat. We're going to be dying to hear what the Fed has to say. Will they do an intra-meeting cut? They're going to see more and more rhetoric about that. Will we be able to wait? We're so impatient. All investors become so impatient, become so conditioned. So I think the focus will be, what will the Fed do before September, if anything? I don't think they will do anything. They need to be prudent. They've always been a little slow to move. And I think if they do insinuate that they're going to do something prior to September, that actually could cause panic and see markets really move lower.
That was a good video. What I'm going to do as well as tomorrow, I'm going to do a breakdown from a visual breakdown, going over the markets from a technical point of view. And I'm going to do a continuation of this so you guys can see how this type of video will impact the markets from a fundamental point of view, especially with earnings, how we're going to look at it from a technical point of view.